Hello, hello, hello. Good to see you all again, almost 12 hours after the first one. Because I did stream London Open at 2:45 a.m. And so just about 40 minutes from being 12 hours. How's everyone doing? How is everyone doing? Hello, hello. What's up, Mario? I'm expecting a bit of good morning. Hey, Zaza. I'm expecting a bit of a slow session, to be honest. It is PM, it is Friday. What's up, Mank? Oh, dude, good to see you. Weren't you in the morning session as well? Who was here in the morning session? Zaza, weren't you also in the morning session? Yes? Man, you guys are dedicated to your craft. No, I appreciate it. Yeah, I'm expecting a pretty slow session. Um, what's good? I just hit a decent 1% on demo. London shorts macro time were good. That's good. How do you guys feel about Fridays? And I feel like I asked this. I've been watching every stream since the lab went live on YouTube. Oh man, that actually that actually that actually warms my heart. Do you mind if I post a screenshot of that on Twitter? Oh, don't mind. Yeah, because that actually means a lot. I appreciate that. Yeah, I'm not expecting anything too crazy. Again, it's Friday, it's PM session, like we're pretty much closing out the week here. Um, but yeah, how's everyone doing? Did you guys have you guys been snatching do what discounts do we have right now? Or what discounts are going on at firms? Let me double check. I know that Lucid's doing 40%. I know that Apex is doing 90 and TPT is also doing 40, but I feel like they always do 40. And then Tradify is also doing 40. So it looks like it looks like Apex, My Funded Futures, Take Profit, Tradify, and E8 are actually all doing discounts of just about 40%. Are you guys like snatching these evals or what's going on? We're close to 2K. Guys, subscribe. Do it for me, please. Do it for me, please. Do it for Juno. If not for me, do it for Juno. If not for me, do it for Juno. Um, and I also think that the Apex discount ended. When does it end? Does it end today? When does it end? Or do they extend it? Why do I feel we pump? I don't feel anything right now, to be honest. I don't feel anything. But yeah, Mank, how are you, man? What's up, Akash? How are you? I took two L's in the morning, so now it closed out. LOL. Yeah, that's fair. In like morning, as in New York session or London Open? Why can I not? What is going on? Traveling to Thailand, going through yeah, Juno is in Thailand. New York AM was long in before 11, but it didn't work out. Too choppy. That's fair. Dun, dun. Alex, do you ever add to trades? And if you do, how do you go about managing the risk when the entry obviously moves? Absolutely. Absolutely, I can. What's up, Alex? Yeah, so the way I add is something like this. And this is going to be kind of tough to explain without having actual price. But okay. So this is probably the only time that I really, really add. So you guys know when, okay, so here. This is actually kind of a good example. So when price does this, and I will get to a real card example in a second, but when price does this, you typically see this, right? Which is why it's like, and guys, I'm so sorry, I'm not an artist. Don't hate on me. But when price does this first side, you typically see this, which is why like the phrase, what's the phrase? Um, Stairs up, elevator down. I think everyone is familiar with that phrase. Change the lighting there. Okay. Stairs up, elevator down, right? That is typically the only moment I add. Or you can also, I mean, it also does this, right? And then that until you see a consolidation and then a low and then yeah, exactly. So here's my thought process behind that. Um God, I'm gonna have to break this down from the jump. Okay, bear with me. This is gonna be kind of like a little mini lesson, but bear with me. This is the way I use internal and external logic. I'm gonna just go from the beginning. This is just gonna be a master class, turning into a master class. Whoops. Okay. This is just gonna turn into a master class. So, is everyone familiar with the concept of an internal range liquidity, external range liquidity? Are you guys familiar with these two concepts? Since there's not a lot of us in here. Yeah? Yes? Okay. I'll kind of walk you through how I apply it. Okay? So check this out. Let's say this is a 4 hour chart. Everyone knows that this is obviously internal, right? And then everyone knows that this is obviously external, right? So let's let's mark this out. External range liquidity. Now, the the typical case is if this were a 4 hour chart, you target 4 hour external, right? So this is an old 4 hour high. And then logically, like you target 4 hour internal range liquidity somewhere around here. And so that looks a little bit like this, right? That this is the logic that everyone's kind of familiar with. The way I do it, and I know this is, I'm sure some other people obviously do it, and this is just based on what I like and what I use, is instead of using 4-hour internal, instead of using a 4-hour internal right after tagging a 4-hour external, right? So this is step one, this is step two. I target a 15-minute internal instead. Now, what does that look like? And bear with me, stick with me. What does that look like? So you can see here, not to, we can kind of cherry pick. I guess I will cherry pick for the sake of the example. Let's cherry pick. So we swept out this 4-hour high, which means we have an external range liquidity. What am I gonna immediately seek for now? As soon as we sweep out that 4-hour high and you have a swing, we have a swing right here. I'm gonna look to target the next obvious 15-minute internal range liquidity. The next obvious 15-minute internal range liquidities are here. Well, that's not that obvious, and here. This is the one ideally I was looking at. Which means that to me, as long as we get a closure below the candle that pierced the previous 4-hour high, this becomes your order block, and this becomes your target. 15-minute internal. So what you're essentially pairing is a 4-hour external, which is just an old high outside of the current range. And then you're targeting a 15-minute internal, which is just an imbalance. Just an obvious imbalance, but of the 15-minute time frame. So you're pairing 4-hour external, a higher time frame external with a lower time frame internal. And the last piece is pretty much just looking for a higher time frame swing. In this case, we swept out the previous 4-hour high. This is the candle that swept out that previous 4-hour high, which means that this is now my order block once you get a closure below. And ideally, you seek that expansion into the 15-minute internal price point. So the question is, okay, if my initial entry, to go back to the original question that we had, could you also target the highs and the lows as the internal liquidity, or is it better to target an imbalance? That is a great question. I like to target imbalances, but what you'll find is that a lot of the times, especially in this example here, you can see that these lows are actually within an imbalance. So if you see an obvious low that was formed within an imbalance or a large gap, these are typically the lows that I'm going to look to target. Now, what you'll also see is, okay, my bad. So my stop is above the high. My stop is above the high if I'm shorting on order blocks. My entry is typically either at the low or the opening price of the order block. And where I would look to re-add is I pretty much just grab all of the imbalances on. So yeah, my order block is my division in time. So if I pop that there, this is when the order block was created. And so anything after, price is supposed to seek lows. Anything before, price was supposed to seek highs. So what I do is I just grab all of the imbalances on this side and I mark them out. And as we close below, I can look to add. So here, look to add. Here. And obviously my average comes down, but I'm also taking into consideration the open, the high, the low, and the close of the candles that I'm trading. So obviously if I'm on a 15-minute chart, I'm going to be observing the 15 I have no idea what just happened. My Zoom just crashed. That was so weird. I'm muted, please. All good? Should be good now. Can you guys hear me? Sweet. Okay, yeah, apologies about that. I have no idea. My software just crashed, so I do apologize. Where was I? I was like deep in explanation. You can tell by all these drawings. Anyways, adding to trades below when it closed below level. Yeah, that's pretty much it. That's pretty much how that goes. So yeah, I like to pair those just because it makes a little bit more sense to me. Like a 4 hour external and a 15-minute internal. And it also just lets you get out of trades a little bit quicker. How was my trading week? It was not that good. I'll be honest with you right here and right now. So pairing the liquidity with the imbalance makes it an even stronger draw. Yeah. In my opinion, yeah. In my opinion, yeah. All right, I'm going to, as I want to shut my mind off trading for the weekend. Have a nice weekend, everyone. Yeah, see you, Alex. Yeah, that's fair. Honestly, my mind has been on trading all day today, and I'm definitely starting to feel the effects for sure. Somebody had asked me, Meg, you guys are funny. Somebody had asked me, am I trading any props? Yeah. So currently I have Apex. What do I have? Apex, Lucid, and Tradeify. I would say those are the three that I'm using right now. Apex, Lucid, Tradeify, and I have used TPT in the past, and I do like it. Because I think, if I'm not mistaken, their price is all in. There's no activation fee. If I'm not mistaken, it's the same with Lucid. What would be your daily or weekly profit target for 150K Lucid Pro eval? Hmm, that's a tough question to answer. I would say to me, excuse me, evals, you want to get them done as quickly as possible, right? But you also don't want to rush it to the point where it's like you're taking trades that you shouldn't be. So I would say it really just depends. Whenever you look at an eval, and this is applicable to everything, what for you guys like I when you guys go out and seek to purchase an eval, like what is the first thing that you look at? Like ignore everything. Like when you go on a prop firm site, let's say, hey, your friend tells you, hey, Apex just put up a new eval, go check it out. And you go check it out on the website. What is the first thing that you see or the first thing that you notice? Like naturally to you. And this is like a question to everyone. Price. Okay. The price and how many days to pass. The rules. Okay. So price is obviously, I mean, I'm gonna think that price is gonna be the first one, and I don't blame you. Obviously, like from a perspective of where we're coming from, like we want to get a good evaluation price for what it is. So what's the second thing that you say you would look at when you what is the first thing that you guys look at when you read the rules, for example? Like when you guys read the rules, what are the first rules that you guys read? The consistency rule? Intraday trailing is a no-go for me. Okay. Consistency score, profit target. Second thing is, did I get an eval ban? I had 10 PA and no reserve evals. Man, you have an eval ban? An eval ban on Apex? That's interesting. Consistency and what's up, Billy? What's up, man? Man, I am yawning. What's gold up to? Nothing. My wife went on a trip. Where to? Where were we? Intraday and trailing is a no-go for. How many of you guys, how many of you guys don't really like intraday trailing? Or what do you think is the most like what do you think is the strongest pressure point for you guys when it comes to trading? Prop firms. Sorry, do you guys think it's a time thing? If like they give you like a time restraint where it's like, hey, you need to pass this eval within X amount of time. you need to pass this eval within X amount of time, or is it the consistency? Do you guys think which one of those do you guys think is like the most hindrance on your trading, or the one that affects it the most? Yeah, time. I started my 150K eval on March 31st, currently up to 5,600. Would you say I'm making good progress in terms of time? Yeah, yeah, I would say you are. Because think about it this way, and this is a very, very common mistake that I used to make. I wish I had like a whiteboard. I'm gonna get a whiteboard. I'm gonna get a whiteboard. I'm gonna start getting into some whiteboarding because everything just seems so much more professional when you're whiteboarding. Um, because think about it this way, right? So let's say you buy, and this used to be me. This used to be me. So let it be known. And I think that this is common, and I think that everyone kind of has to go through this in order to see the other side. It's kind of like that logic. It's like, how can you appreciate happiness if you've never experienced sadness, right? Whatever. But check this out. Um, so let's say you buy an eval. I'm not going to draw this out because this is just going to take me forever. Let's say you buy an eval on March 31st, whatever it is, for 200 bucks, right? Now, the impulsive person is going to want to try to trade this as soon as possible to pass it. And this is me, right? The patient person might just treat it as a funded, and it may take a bit longer. Now, yeah, so I'm definitely the impulsive person. I'm not going to sit here and point fingers to anybody else but myself. The impulsive person is going to want to trade this ASAP to pass it, and the patient person might just treat it as a funded, and it may take a bit longer. But let's look at this. Which one of these people do you think? So this is person number one. I'm gonna. This is person number one, and this is person number two. Which one of these people do you think is a higher risk? Is it one or is it two? Which person is a higher risk? Just in general, in the just the basic concept of risk. Which person? Number one. Easily, right? When you're a higher risk, which person do you think is going to go through evals more? One or number two? Now, which you have the left and the right. Who do you think the person on the left is? And who do you think the person on the right is? You see where I'm going with this? The impulsive one is on, you mean, on the left. Yeah, yeah, I think you're, is it? Yeah, the impulsive one is on the left. because this is their purchase history within 10 days. Eval 1, eval 2, eval 3, or reset. Sorry, I guess I should have written reset. That would have been a better word. Reset, reset, and passed. Whereas the first person passed on the 10th day, and then they also passed on the 10th day. But the difference here is that obviously this took a couple more tries, right? So realistically, it's pretty much just kind of it's where did this question even come from? Oh, right. So the way I see it is I think if you notice that you're better off being patient and you notice that you can decrease the amount of money that you spend potentially, then, just try to be smart about it and a little bit more patient. Oh yeah, 100%. But it also just depends on how much risk you can take on, right? If you're a person that can take on that much risk, and if you're a person that can where I'm done trading for the week, locking my stuff now. Oh yeah. Yeah, be smart about it. Be smart about the decisions, but don't be impulsive. I'm still a very, 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 very impulsive person. And I think one of the main characteristics, like I think one of the most important things to be as a trader is just self-aware. I think that that's one of the self-awareness. Yeah. Yeah. Like if you guys see Kane talk, like Kane is incredibly self-aware. Like one of the most self-aware people I know. One of the most self-aware traders I know. Same thing uh with like Leo. Both Leos, Leo. I always I'm horrible when it comes to like Leo. You guys know. Who else? Based on like what I've seen from the live trading, XYZ, super self-aware. Yeah. Just uh just being self-aware, like knowing because it lets you like see from an outside perspective, right? Am I doing too much? Am I doing this? Am I doing that? But then it can also lead to overthinking. So it's just really about managing your expectations and being realistically self-aware. See it, Mike. See it, Billy. Yeah. It's also like I would say that these are the two skills that I think translate the best. These two, self-awareness and knowing when the sun is shining. And these obviously go hand in hand, but these are the two. If somebody told me, hey, if you could summarize the two skills that I think would translate the best in terms of helping me out in trading in my trading development, I would say your self-awareness and then knowing when the sun is shining. And what do I mean by that is knowing when the sun is shining is knowing when the opportunity is for you. And that also comes with the self-awareness. I think the topic came up because of time. Personally, I was talking about closing time for props. Most props only do intraday, so you're kind of forced to be an intraday trader to build personally. Yeah, that's true. Yeah. But yeah, knowing when the sun is shining is very, very important. And what I mean by that is opportunity. If you were to plot a chart where the x axis is time and the y axis, oops, and the y axis is quality of opportunity. This is pretty much what the market looks like. You x-axis is time, y-axis is quality of opportunity, and this is your model through time. So realistically, your alpha will fluctuate through time. And this is true for all trading models. Your alpha will fluctuate through time. When the sun is really shining, this is when you could potentially think about increasing risk. When the sun is not shining, this is when you think about, let me take my foot off the gas. And this is true for, again, for all models. Not all models will have a consistent alpha because of the variables in the marketplace, such as um, external risks. And what do I mean by that? What can be applied as an external risk? Economic risk, political risk, natural risk, natural what is it, disasters, consumer risk, etc. There are so many, but there are two here that stand out a lot for right now. There are two here that actually really, really stand out for like what we're experiencing. And it's going to be the first two. You have economic risk. Whoops, I did not use the highlight. Economic risk and political risk. Why? Because right now there are a lot of geopolitical events going on that directly affect the market. Why? Because oil is one of the largest commodities, and it is probably the one of the three major commodities that the entire world depends on, right? And what this does is it obviously shifts the way large participants um, interact with the marketplace, and that directly affects us, right? Um, and now again, I don't want you guys to get into the habit of potentially blaming the market, right? I'm not saying that, oh, because there is geopolitical risk, it's the market's fault that I took a loss today on gold. That is never the case. The case is always, I should have been aware of the geopolitical risks and I should be accepting of that risk no matter what. And if I take a loss, it's completely my fault because I'm the only one that pressed the button. Does that make sense? So that's what I mean by self-awareness. So your model through time is going to see an increase and a decrease in alpha, and it's going to have cycles, just like anything in the marketplace. The markets have cycles, commodities have cycles, futures have cycles, indices have cycles. It's all completely normal and cyclical. How you react as a trader is your one and only job, because your job as a trader is to understand when it is time to step on it and when it is time to let go. And I personally think that right now, personally, and I'm speaking for myself, um, and again, this is all just what I take into consideration. Um, this right now we have too much economic and too much political risk for me to be actually stepping too much on the gas. So as opposed to being, hey, let me continuously, try to put on a little bit more risk, maybe I should just step back and try to understand that maybe it's not the right time for me. And I can remove myself from both monetary and financial risk and mental risk. I know the word risk has been thrown out a lot here, but yeah. Sorry, I was still here. It did look like I get disconnected. I was so focused on looking at something. It did look like I was frozen. Oh, that's hilarious. That is hilarious. Oh, good. Ah. Anyways, hopefully that made sense. If you guys have any more questions like that, just let me know. I will gladly, gladly answer those. Mario, I appreciate you sticking by. Yeah, it's a definitely a slow session. Um, Not a lot to kind of take in here. What does everyone have planned for the weekend? What's everyone got planned for the weekend? Does it make sense to risk a lot when one MNQ is more than enough, especially if you're copying trading 5 accounts? The goal should be building a buffer and wait until the sun is shining. Yeah, 100%. I think that really is the goal because once you have a buffer, then you can really just step on the gas when it's needed. Helping the homeless, going to the beach, gym, church, and studying the markets. How about you? Damn, that is a productive weekend. I'm not sure I have anything planned out. The only thing I do know is that I don't really want to look at the charts over the weekend. I don't really want to look at the charts over the weekend. I think I'm like a little hazy. I was on charts basically all day today. Well, not all day. Kind of skipped the New York AM session a little bit. Um, excuse me. Excuse me. Family birthday party. That's fun. What are your two main assets to trade? NQ and ES. I actually started with ES first, funny enough, because I used to trade. Well, how many of you here are familiar with Wyckoff or Wyckoff, whatever you want to call it? To be honest, I'm not even sure what the right pronunciation is. How many of you in here are familiar with Wyckoff, Wyckoff? It was like one of the first concepts that I ever learned. And I mean, to be honest, it makes sense. Like I'm not gonna discredit it because I use something different. Excuse me. I know about Wyckoff, Wyckoff. Yeah, that was the first that was like the first set of concepts that I ever learned. And yeah, I don't discredit, and I want you guys to know something. I don't discredit any strategy. I don't really discredit anything in terms of that matter unless it sounds really, really silly. Um, because I feel like everyone obviously trades their own way and everyone kind of has their own way, and that makes sense. It's whatever resonates with you the most, as long as it's statistically backed. Like, who am I to judge you? Wyckoff. Yeah, Wyckoff is the OG MMXM model. Yeah, I agree with you 100%. Anyways, that was the first set of concepts that I learned, and I was trading SPY options. As I was learning that, I lost a lot of money. Not a lot, but it was a lot to me back then because of the job that I had. I would basically work like 80 hours. I'd deposit my money into my brokerage and like I would get paid on Fridays. I'd get paid on Fridays, I'd deposit my money into my brokerage, and then on Monday morning I would have blown through it all on options. And that's just me being real. That's just me being honest. Like I would work, yeah, like 70 to 80 hours a week. I'd get paid bi-weekly. Boom, on a Friday, cash in that check, deposit into Thinkorswim. By Monday morning, I would have blown through it all. And then it's like, okay, now I'm forced to eat ice for the rest of the for the rest of the week. The holy grail was the wedge. So yeah, I started with that. So I was trading SPY and then I was trading SPY, and so obviously you guys know what the three, or I think it's like four. You have SPY, ES, SPX, and what's the fourth one? Is it SPY, SPX? Let's say, oh, and then you have the CFD, which is the SP 500, I think. So these all pretty much represent the same thing. You guys might be wondering, what the hell is the difference? Like, what is the difference between these? So SPY is the ETF that tracks. Well, okay, first of all, let me get rid of this one. Just so you guys know, this is interesting information. The important one, the main one, is SPX. So this is the index itself. SPX is the index itself. The SPY is the ETF of SPY. So it's the exchange trade fund of SPX. ES is the futures contract that tracks SPX, and SP 500 is the CFD contract of SPX. So these might all have slightly different values, but they all track the main asset, which is SPX itself. Anyways, that's how I got into. So I was trading SPY options, and then I was like, oh, I can just like I learned about futures, and then I was like, oh, I can just trade SPY, but instead of SPY, it's just ES. So then I started with ES, and then I obviously saw that it had a brother, and that was NQ. Um, that's how you learn though. Sometimes you got to learn the hard way. Experience is the best teacher. It gives you the tests first and then the lesson afterwards. Absolutely. Best advice to your younger self the day you lost your biweekly check in those markets. Just curious. The best advice I could have given myself was that I didn't need to risk all of it in order to feel something because I feel like, and I still do, is when mm, this is a tough one. What's the biggest difference between you see between the improbable and the probable? Um, their ability to not take things personal. I think really, sometimes we feel like the market is like out to get us. And I think what I've noticed with really good traders is again that they're really self-aware and that they understand, like they're very accepting of risk. Thug it out. Yeah. No, yeah. Those times will make or break you. Exactly. If you want it bad enough, you will stick around long enough. But there also needs to be, I feel like a lot of it is about timeline, just accepting that it's going to take time and just have to submit to time. Yeah. But you can submit to time and also work smart. You don't have to you don't have to look at the charts 8 hours a day in order for you to get better. Like that's not you getting better, right? There's a difference between working hard and not very smart and working hard and smart. Working hard and smart will get you further, and could also potentially save you some time. Because the truth of the matter is like, what do you guys think right now? Instead of looking at this PM session, what if I told you guys to go look at your old trades and review those old trades and make notes of what you did wrong? Which one of those, if I gave you option A, right? Option A is looking at the PM chart, paint dry for 2 hours, right? Option B is option B is looking at your old trades and reviewing what you did wrong and how you can improve it. Which one of these do you think is better? Which one of these do you guys think nets a better return? Option B for sure, right? So that's what I mean by working smart. It's like I could sit here and we could sit here and look at the charts for 8 hours a day. Or I can go back and look at my worst trades and see what I did wrong and see how I can systematically improve it. And the return on option B is significantly higher than the return on option A. The ROI is just way better. Anyways, we're getting a little bit of a pop here. Let me see if I can. I'm not a big fan of this. The fact of the matter is this candle swept both the high and the low of the previous candle, and so we're just kind of in this indecision. We're just kind of in this indecision. What I do like is that you do have an order block here, which price is reacting off of. So I would like to see maybe a potential continuation here. It's definitely possible, but yeah, I think that there's just a lot of indecision right now. But if you are looking for longs, I would say target midpoint of this range or the high. So you'd be looking at 314s, and you did get a closure above this candle's high, which means that confirms the order block. So you saw a retest. So that's kind of what I would be looking for in terms of longs. We have been trading away from failure swings recently. I hate it. And that tells you something, right? That's a characteristic of a marketplace that fails to finish a move. And that's just something that it might not be beneficial for you to participate in, you know? Would you take that long? No. No, because I don't usually trade PMs. And I mean it's not horrible. I will admit, like it's not ugly. I also just don't think there's enough volume to finish, you know? Like I don't think that there's enough volume to finish anywhere. Oh no, no. What's your name? Yeah, I just don't think that I don't think there's enough volume for us to get in a particular direction. Now watch me say that and this thing is just gonna fly. But yeah, I don't have enough confidence in the volume for me to actually get a move to go somewhere, I think. Not get a move, but you guys know what I mean. Excuse me. Trump candle incoming. Yeah. Oh, dude, honestly, I wouldn't don't even I wouldn't even be shocked. Last 5 minutes of the market, he's like, well, he goes back on what he says. Market just dumps. So, oh, excuse me. Trump candle. That's hilarious. What I notice in trading is that working hard equals learning a concept and about the market. Mentor backtesting, backtesting. But once you get through that phase, it's boring. Yeah, that's where most people get bored and quit because they can't submit to time. A mentor Once said, without proper behavior, knowledge becomes useless. Yeah, 100%. Knowing a ton of concepts and not like really knowing how to apply them or how it affects your edge is just like mindlessly learning, right? There's no, to me, it's like, not that there's no point in learning, but it's almost like reading and then not applying any of the knowledge that you just read. So it's just like your knowledge, the knowledge that you're consuming or the information that you're consuming should serve as a tool for you to affect your edge. That's just my opinion. That's where most people get bored. Yeah. Yeah, 100%. I think you need to, as a trader, you need to know what's worth learning and what's worth not, right? And this is why, like, you guys have heard me say this before, but I literally always say, before you learn something new that you want to, something new about trading, the first question should always be, can this improve my edge? If yes, okay, take the time to learn it. If no, don't. The most important part is converting that knowledge into muscle memory. Yeah. Yeah, I'd say the most important part is just knowing whether it affects your, like everything you do, I think should be towards a greater goal, whether that greater goal be improving your trading model or improving your mental. Those are the two, in my opinion. You are getting a push here above those 281s, so congratulations to all of those that are long. How do you practice patience and not being greedy? I never practiced patience. I was super greedy. Life taught me patience, and is still currently teaching me patience through repetition. That's how. Because I make the same mistakes over and over and over until you just get so tired of making the same mistakes that you just stop making them. You're like, hey, Alex, like this mistake makes no sense. You could prevent this mistake by just not doing this. And then it's just like you just stop doing it. But you can't do that unless you like journal and you write it down. So obviously, like I was writing down, I still write everything down and I still keep track of all my notes and I try to go back and read them and it's like, hey, if I notice that I'm not losing weight, but I'm eating ice cream every day. Like maybe I should just stop eating ice cream. Oh, but I can't, but it's so good. But it's like, yeah, well, that's the commitment that you have to make, right? Eventually, after so much ice cream, you just get so tired of yourself making the same mistake over and over and over again that you just stop. Like you have to make the decision to stop because it just doesn't make logical sense. You just start thinking practically. You start being practical. It's like I can either improve this by doing that, or I can just stay in the same position and not get any return on that, you know? What are some of the rules that you feel are most important? Journal when you make mistakes. Um, yeah, journal when you make mistakes. Always, always keep track of what you want to risk on a day. And and mm, yeah, I would say those two. Journal your mistakes and then always write down your risk. I don't really wake up in the morning, like in the morning. I used to wake up in the morning and make a plan. I'd be like, oh, hey, I have this plan. This is what I'm going to execute on. But I found that that wasn't really too effective. So now what I do is I wake up, I write down maybe my bias, and then I just write down my risk because then that way I just have that number in my head and I wrote it down. And if I over risked, then I know that I did because I already had it written down in the morning. Oh, Zaza, that's really good, man. I appreciate that. That's really, really cool. Is it important to set out when you're logging off, like profit wise or trade wise? I would say don't have a this is going to be so I'd say you're better off having a limited hmm, I don't like having a profit target for a day or for a month because A, you can either cap it and then B, it's like a mental hindrance. Because then that number is gonna you're either gonna push to get to that number or you're just gonna cap your gains when you get to that number. Let's say like you're on a winning streak, you're like, oh, I already met my weekly limit. Like, you could always, you know, it's very personal, yeah. I also think it's important to just know your best trading times. Know your best trading times by the hour. Just know when you're good and when you're not, and be honest with yourself about it. I am complete dog shit when I trade Asia. I am complete dog shit when I trade London. I am complete dog shit when I trade PM. I am pretty good at around 10 in the morning. Not pretty good at around 10 in the morning. I know that I'm good from 9:45 to 10:45 in the morning. That right there is my best. Statistically, it's my best hour, and it's when I feel the most confident. From 9:45, whenever I let the whenever I let 9:30 at least breathe for 10 to 15 minutes, I always trade better. So just be honest with yourself. Be self-aware. Should I really trade Asia tonight? Because oh, the market's lately been, you know, the market lately has been moving Asia really well. Should I trade Asia tonight? Like, should I do it? I feel like I should do it. Nah, because even if you do get a winning trade that one time over the course of time, can you prove that you'll have profitability during that session? Not really, because you haven't tested it. You don't have any statistical data. You're just going based off of vibes. So just be honest with yourself. When you're good, you're good. When you're bad, you're bad. And that's that. And that's okay. If you want to be good at, hey, if you want to be good at Asia session, then take time and backtest it and apply your model and see if, there's something there. And then it's like, okay, maybe things can change. But as it stands, I'm not a good trader during Asia. I'm not a good trader during London Open, and that's just me being honest. My best hours are from 10:45 to, I mean, 9:45 to 10:45 in the morning, Eastern time. And that's just what it is. Didn't we just focus on New York AM? Yeah. No, I mean, I just stay focused on New York AM. It's the session that has the most amount of volume. It's the session that makes the most sense to me. But some people might have a model that plays out during Asia, Who knows? I don't want to like I don't want to like invalidate somebody's. No, you should just focus on price action, but New York AM offers clean PA. Yeah, I agree with you. You should just focus on price action. But the thing is, New York AM does offer the most amount of volume. So you just have the most amount of energetic movement. When I started implementing more of the lab plus T-trade strategies, man, this has been the best week. A lot of less stress with a clear method. I love to hear that. I love to hear that. I absolutely love to hear that. This week I started implementing more. Sorry, I just like read the same message. I'm going a little crazy over here. Okay. Yeah, not much going on for me here, but I'm glad I was able to come on and just kind of talk to you guys for a little bit. I know that it's a Friday. I know everyone's kind of logging off. Everyone's already kind of got their weekend mentality on, and that's completely fair because I'm ready for that too. I am ready for that too. Yeah, ready for that weekend, some weekend breeze, get some sun, go to the beach, get some more sun, more beach, get a brew going, maybe a seltzer. Favorite seltzer? Probably High Noon. And why? I don't know. I just like High Noons. I like the fizziness. They're all obviously fizzy, but the High Noons just have, I think, the perfect amount of fizziness and carbonation. I was expecting volatility during CPI, another disappointing news event. Yeah. What you can notice and you will notice during events like or during market um during market cycles like the one that we're currently in now is that one, everyone is preparing or everyone is adjusting for non, what the hell is the word that I'm looking for? For non-scheduled risk events. So this takes away from the volatility from scheduled events. And I'll explain to you why. You typically, when we have a scheduled event like a red folder news, it's economic data, right? So a poor jobs report can lead us to high volatility. A really good jobs report can lead us to high volatility. And so obviously they've adjusted for that news release. But when there's not like unscheduled risk events, such as like the current war, they need to adjust and account for that. So it'll typically take away from the volatility from the scheduled events. Think of it this way, open, hello, and close New York theoretically should be the distribution phase, and that's the phase that you want to participate in. Yeah, that logic works. I know a lot of people that use that logic, and uh, I know that, it makes sense. I agree with you. It is the highest volume session. Okay, team, what does the next week look like? Oh my God. Yeah, that makes sense. Yeah, I don't even want to look at next week. There's nothing going on Forex Factory. Tuesday, PPI, 8:30, and then that's it. Wednesday, Thursday, Friday, just high impact, and then there's no news on Monday. There's no news. Thoughts on universal currency? No comment. I don't even know how that would I don't think I've actually ever spent one currency to rule them all. The lab coin. You're right, Darian. You are so right. XRP to the moon. I've actually never ever traded a crypto coin or a cryptocurrency coin or anything for that matter. I've never traded. The only thing I've traded is a single contract of Bitcoin futures from CME, the CME product. Would this long have played out? I think so. I think the dollars are going to go to shit, and everyone whose assets gold, silver are going to be considered high end in the middle. Yeah, cyclical. I agree with you. I think gold is going to be worth a little bit more. It's going to be worth a little bit more. Dollars are going to go to shit. One currency. Hmm. But, others have. Hmm. Time is it 3:30? Hmm. Yeah, not much going on here on this chart. Hmm. Wouldn't be opposed to seeing it go to 314, so 314.75. But it has just been kind of stuck in this little bit of a range on that 5 minute chart as well. Hourly looks really ugly, just a lot of indecision overall. I think okay. All right, team. I think I'm gonna call it there. 3:30. Not much for me to really much do. Okay. DJ would have chased that long, but time tells me not to participate. 100%. That's good, man. Self-awareness. Um, yeah, I think I'm just gonna call it there. Not much going on. Hopefully, some of the talks that we had today, hopefully some of the talks that we had today were good and you guys enjoyed it. I know I did. I definitely yapped on for a good amount of time. But listen, I appreciate all of you guys. Tomorrow, Saturday, Sunday, we'll be back Monday. Regularly scheduled program, London Open, New York Open, PM session. If you're watching this and you're not subscribed, please do. I think we're only like 55 subscribers away from 2K. Like the stream. I appreciate all of you. Yeah, enjoy you guys' weekends. Any questions, just let me know over the weekend. And yeah, thank you so much, everyone. I appreciate all of you, and you guys have a wonderful, wonderful weekend.